Good afternoon, everyone. Thank you so much for making the time to join our webinar today. We'll give a few minutes for more folks to join, and then we'll get started with the presentation shortly. In that time, hey Sahil,
Hi everyone. Hi
yeah,
Nikin.
didn't mean to put you in the spot, but where are you calling from?
So I'm located in the Bay Area, San Jose.
Oh, wonderful.
Yeah. How about you?
Right now in New Jersey, where it's 9 degrees Fahrenheit. I don't want to convert to
Yeah.
Celsius.
No. I know. I spoke to my uncle yesterday. He lives out of Scotch Plains in Jersey, so I know
Oh,
how it
man.
is. Right.
But how did you hear about this webinar?
I don't know. I was actually watching some YouTube videos on not HELOCs but SBLOCs, which are like similar thing, like security based line of credits. And then I think through an ad I stumbled upon this. Actually, I remember now. So the Open Atlas, I'm subscribed to them. I think I'm a subscriber to their mail, so I think it's through one of the emails I signed up.
Wonderful.
Yeah.
I'm one of the curators for the nonprofit. So we did a conference at the India Community Center in Milpitas last August. So it was
Oh,
on
okay.
high skilled immigration broadly, and we'll be
Mhm.
announcing soon. But this year, August 21st, 22nd, we'll have a second conference as well.
Awesome, awesome. Yeah, thank you. Thanks for having
Amazing.
us.
Absolutely. Appreciate you
Yeah.
making the time. Looks like we have about a dozen or so people here. Want to be respectful of all of your times. And in terms of what we are going to cover today, we're going to start with a presentation and then have general Q&A. In case you have any questions during the presentation, please feel free to use the chat function. In case someone else has asked a question that's on your mind, please upvote it so that way we'll be able to answer them in the order that it was received. Let me also start by talking a bit about my background and the work that we do. So I'm originally from Bangalore, came to the US about a decade ago, studied electrical engineering, went into startups. My own immigration journey happened through EB1A, so F101, EB1A. But my EB1A took me 4 attempts. So lots of RFEs and such. And I was so frustrated with the journey that after I exited my previous startup and was thinking about what to do, immigration was the most pressing problem to solve. And that's what led us to founding our parent company known as Open Venture. Today we have 6 brands, everything from admissions consulting to jobs, housing. But our largest practice areas are work visas and green cards. We run a law firm where we work on O1, EB2 and IW, EB1A, self petition merit based visas. We also do E2 and EB5, which is a self petitioned investment based visas. Where I spend most of my time is on EB5. I'm a FINRA registered broker dealer. So a lot of my time is spent on helping applicants with independent project diligence. But as a firm, as a team, we also help on the immigration side. We spend quite a bit of time on funding strategy. We're going to go into more detail in our presentation today. Related to that, we also help applicants with tax support. So we have dual license CACPs. And finally, I would say miscellaneous services. Sometimes applicants have all of this figured out. They don't have a birth certificate, or they have a birth certificate, but their names are not on it. So we have tie-ups with the registrars in India and can help with that. So we're set up as a platform to help applicants end to end through the EB5 process, but we can also help them a la carte. So without further ado, let me share my screen and get started with the presentation. And the main disclaimer here is this is for informational purposes only. It's not investment advice, it's not legal advice. In case you have further questions pertaining to your own unique situation, happy to set up a follow up call, like a one on one call, and discuss it in more detail. And today we're not going to talk about EB5 overall. We're just going to be focused on the funding aspect of EB5. So, in case you're curious more on what the immigration side of EB5 looks like, what are the different types of projects available, on the Open Atlas YouTube, we do have a podcast series. So, you can go ahead and check one of our previous webinars. So, in terms of source of funds, it's very important to understand the mindset of the adjudicator. What is USCIS fundamentally looking for on source of funds? I mean, to put it very simply, they're looking to make sure the $800,000 that the applicant is investing in a project is lawfully obtained. And to further simplify it, it's basically making sure that it's $800,000 of white money, right? And what is the process that happens in order to show it? So, what attorneys typically do is it's very similar to triangulation. So, let's say you're an employee at Microsoft, you have $100,000 in savings. The process to prove that that $100,000 is lawfully sourced, you have 5-7 years of bank statements, tax records, pay stubs. So, some attorneys, they literally take a highlighter and they go step by step and they say that, hey, for this paycheck of $16,000, this much went into savings. The payroll taxes were paid. The employee paid taxes. So that way, through multiple sources, we're able to show that this $10,000 is lawfully obtained. And this happens step by step by step. It's a pretty tedious process. And that's what the attorneys primarily do when they say they do source of funds work. I'm giving an example here of earned income, but based on which source of funds we are considering, this process would slightly change. The other important aspect is that every dollar in funds has to be attributable to the applicant. Now, what does that mean? It means that the workflow really matters. One of the most common questions we have seen applicants ask attorneys is, hey, can my parents, a friend, or relative directly fund the EB5 project? And the answer most times, what attorneys share, is please don't. So, in terms of the workflow, the origin of the funds, then how it's coming to you, it does have to come to your account first and then move to the EB5 account. And this is a very important aspect. I mean, within the US, perhaps easier to execute, but when you're talking about any funds transfers from India or another country, let's just take a few more steps to set up and execute. Now, with that understanding, to go into the most common source of fund, it would be earned income and savings. And the important question to ask here is, what does USCIS want to see? So what they have, you could say, been conditioned to see now is 7 years of bank statements, tax records, pay stubs, right? So that has become the default. A question to ask is, excuse me, do they even need 7 years? So let's say you've been in the country for just 5 years, or most of your funds were gathered in the previous 2-3 year period. Why do they need 7 years of bank statements? That just become the default in the space. They're just used to seeing that history and that level of documentation. And this is for all of your bank accounts, right? And the main thing that the attorneys would flag and want to point out are any like cash transfers. So if you've done tens of thousands of dollars or hundreds of thousands of dollars in transfers from one account to another or outside of your accounts entirely, they'll very likely ask you to explain what the purpose of that transfer is. Again, it could be for education, healthcare, family remittance. A lot of reasons why people transfer substantial sums, but that's what they want to document. So, for people who are employed, all of this is pretty straightforward. For business owners, there is additional documentation required. And based on the type of business, whether it's a C corporation, LLC, there'd be some additional requirements as well. So that's a brief on earned income. It's mostly documentation heavy. Attorneys want to see if there are any flags, which are large deposits or transactions that cannot be explained. Otherwise, it's a very straightforward process to leverage this as a source of funds. Now, coming to other source of funds, a very popular option is a HELOC, which is a home equity line of credit. And many applicants, they've bought homes 5 to perhaps 10 years ago, and the homes have appreciated in value meaningfully. So let's say you bought a home for $1 million, and it's $1.5 million today. You're allowed to draw on the increase in equity value. So that $500,000 increase in value, you can basically take another mortgage, to keep it simple, on your home. Now, in terms of how HELOCs are viewed, it's a very common source of fund. It's viewed very favorably in our experience with USCIS. That being said, it is still documentation heavy. So USCIS cares about with what funds you originally purchased the property. So you have to go back and show documentation around how you paid for the home and also how you continued making the interest payments. And the typical flags here are that sometimes applicants, when they are buying a home, they might take help from friends and family. So they might get a $50,000 or a $100,000 transaction to help make the down payment or even one of the interest payment. So that's a flag that comes up. Again, it can be overcome with proper documentation. That's what's needed from USCIS's eyes. Now, on how much you can draw and what the rates are, typically it's the market rate and it's 0.5 to 2%, whatever the market rate is. We have seen in most states applicants able to get 80% loan to value, except Texas. So in Texas, there's a limit of 50%, and that is just like a statewide rule that applies. So in most states, you have a higher limit. In Texas, you do have a restriction. And the requirements are, of course, there is a process. You have to get your credit score checked again. They look at your debt to income. They look at how much equity value is in the process, is in the property. And the main thing to keep in mind is the processing time. So it does take a month, month and a half for us to initiate this and to make sure we're in a place where we're ready to draw on the funds. Now, an important clarifying question that applicants have often is how does this change if I have my primary property versus an investment property? The main difference is the number of lenders you have available. So if a property is owner occupied, a lot more lenders are available for you to access. For investment properties, that shrinks considerably. But a good bet, even for investment properties, are local credit unions. So you can look at your local credit unions. You can even look at your state credit unions. They have that underwriting experience of investment properties in a particular region, and they'd be able to help you with a HELOC there. So in case you have any further questions on HELOCs, please feel free to put it in the chat. Moving on to a related but different concept is a refinance cash out. HELOCs make sense when the property was purchased in a low interest rate environment, or when the property value was 1 million and now it's appreciated to 1.5 million in the example that we discussed. But what happens if you purchase the property in a higher interest rate environment and now there's been appreciation in equity value? So the option there is different. So it's called a cash out refinance, where you can basically take a new mortgage on your property for perhaps a lower interest rate, and the difference in equity value is given to you as a check. From a documentation perspective, it's very similar to a HELOC. You still have to show how the property is purchased, how you continued making the interest payments. You, of course, have to show the refinance agreement, the cash out proceeds, and whatnot. But most often, we see applicants stuck. They're like, hey, my property perhaps hasn't appreciated so much in value. I don't think HELOC is a possibility. In those cases, we can definitely switch gears and consider a refinance cash out instead. Part of this is also when someone purchased a property before 2021, roughly, there's been meaningful appreciation in equity. Post that, 2021, 22 till 24. So if it's more of a recent purchase, there a refinance cash out would likely be a more appropriate option. Moving on to a very different source of fund, are 401ks. Now, there are two sides to this 401k. One is 401ks with your active employer, and another is 401ks with a former employer. And let me briefly talk about the active employer 401k first. This 401k is governed by the plan agreement that your employer has with a company like Fidelity, Charles Schwab, whoever is administering the 401k. And that plan agreement has restrictions because the employer is actively contributing to it. So the maximum that we have seen applicants leverage a current 401k is to basically take a loan against it. So you're allowed to take a $50,000 loan. You can typically take it twice in your lifetime. So this would be one of those situations. There is an interest rate here, but basically you're repaying into your own retirement account. So it's as close to free money as it gets. And you can also make those payments or arrange those payments as payroll deductions. So that's with active 401ks. Now, what happens with a former employer's 401k? This is where we have a lot more flexibility. So, former employer's 401k, for the primary applicant, every dollar can be used without any tax liability or paying a penalty. Now, how does that work in practice? So basically, you move the funds from a former employer's 401k to a self-directed IRA account. So there are quite a few providers of self-directed IRA accounts. The one that we see most common is Alto IRA. And then you do a trustee to trustee rollover or a direct rollover. So you change the trustee from the S&P 500, for example, to the EB5 project. And when the EB5 project matures, the funds come back to your retirement account. So the reason there's no tax liability or a penalty is because when you're doing a direct rollover with the former employer's 401k. The funds never come to you. So they're basically just in the retirement system. And once the EB5 investment is complete, they come back to the retirement account. So this is a very common option that we see applicants use as well. And in terms of the documentation that's needed, very straightforward documentation. You can mostly download these statements from your 401k accounts as well as the self-directed IRA accounts. A question applicants have is, hey, just as a best practice over the past few years, I ended up rolling over everything to my current 401k account. So what options do I have right now? So if this applies to you, the best action is to set up a call with your plan administrator. So there's a client relationship manager assigned to your account. You can set up a call with them and explore what options you have. Because what governs the active 401k account is the plan agreement between the employer and a company like Fidelity or Charles Schwab. So if there's flexibility in that plan agreement, then you might potentially be able to leverage those funds. So that's on 401ks overall. Just to summarize, previous employers 401k, we can use those funds without any tax liability or penalty. Current employers 401k, we can take a loan of up to $50,000, and it's governed by the plan that the employer has. So there may be more flexibility, but you have to check with the plan administrator. Moving on to another source of fund, which is loans against stock. So a lot of applicants, especially ones who work for big tech companies, Seattle, Bay Area, other parts of the country too, they receive part of their compensation in stock, and that has accumulated over the course of a few years. Some applicants still have it concentrated in their company stock, and other applicants have diversified. So within the same account, they have used it to buy index funds, mutual funds, and make other investments. So when you're talking about loans against stock, there are 2 to 3 considerations here. Number one, it really matters the tier that we are on. So the interest rate that you would receive is affected by how much in a position you have and how much you're looking to draw as a loan. So we typically see an interest rate of 6%, and sometimes we have seen even high as 7% from Charles Schwab and Fidelity. But the higher the tier, as in more of a portfolio you have there, the lower the interest rate becomes. The other consideration is how diversified is the portfolio. So if the stock that you're planning on drawing against, it's volatile, then you're likely going to get a lower loan to value versus an index fund. So typically in index funds, you have seen the highest loan to value. You're able to draw out meaningfully more versus a volatile stock such as Nvidia or Tesla. The main flexibility is that the payments are interest only. So we don't have to consider the principal contribution heavily. However, there's still time required in order to set this up. So typically the account, for lack of better words, needs to be warmed up. So you have to agree on the rate with Fidelity, Charles Schwab, who is the account manager. And then they do request time in order to initiate this process. And this has to be aligned with your immigration and source of funds timeline. Now, what are some best strategies to follow here? One of the strategies that we recommend is to just shop around. There are three, four large players in the space: Fidelity, Charles Schwab, Morgan Stanley, E-Trade. And you get a lot of leverage when you say that, hey, if I move my portfolio to your brokerage, can you give me a better rate? So that way, you can initiate a competitive process and get a few quotes from the different brokerages. And the best people to speak to about this is the client relationship manager again. So based on how much stock you have, there's possibly someone assigned to your account, and you can set up a call with them and discuss this in more detail. Taking a step back, overall, who have we seen give the best rates? So the provider that has given the best rates overall consistently has been Robinhood. So if we're talking about taking the entire 800,000 as a loan against your stock, which means you're potentially transferring a million, 1.1 million into Robinhood, their interest rate is around 4.7%. Again, this is something you'd have to discuss with them to get a rate specific to your portfolio. But they, over the past year, they've just consistently been a very supportive provider over the other large traditional brokerages that I just mentioned. And let's say you do consider going with Robinhood, then the main consideration, in addition to that, would be just the time it takes. So you do have to transfer the funds, wait a week, and only then do they enable you to draw a loan against the stock. This is a much more expansive topic. So if you have further questions, please feel free to share it in the chat. Another source of fund that we see are unsecured personal loans. And what's very interesting is how USCIS has viewed this or changed their views on this over the past few years. Because initially, or after the program was reauthorized in 2022, we entered into a period where if the entire $800,000 is attributable to an applicant, the funds are at risk. The fundamental premise of EB5, USCIS approved the petitions, but then gradually they got stricter and stricter. And I'm specifically talking about unsecured personal loans, because what changed their thought process is when they looked at an applicant's profile, which is their earning potential, income, and such, and they observed a very large gap. So let's say through a variety of sources, you had 400,000 in unsecured personal loans. The question that came to the adjudicator's mind is that, hey, we are not that confident this person will be able to repay this loan. It doesn't look like the family has enough earnings potential. So what's happening here? Or what is motivating the lenders to provide these funds to the applicant? Are they actually providing it to the applicant, or are they providing it to the applicant thinking of the project as collateral? So that kind of set off alarm bells with the officers who started thinking that way. So we have seen considerable pushback on using unsecured personal loans. The pushback comes, the caveat I want to share, is with the amount of unsecured personal loans. Again, if it's 150,000, if it's 200,000, that's perfectly fine. That can be balanced with the overall funding strategy. But if it's higher than that, that's why the questions start to be raised. Now, when it comes to the unsecured loan lenders, what do we have to check for? So let's say we have a gap in funds, we are 200,000 short. We want to check out a few options. The main language you want to look for are any purpose loans. Because a lot of online lenders like SoFi, they restrict, I mean, it's easy to get approved, but they restrict the use of funds. You cannot use it to make any investments. So in the loan letter, you just don't want any prohibited language. And that would be in a specific section called prohibitions on what you can use the loan funds for. And in terms of lenders, you could say a large, relatively national lender who's been very good about providing these loans has been First Tech Credit Union. We have had quite a few applicants leverage unsecured loans of up to $150,000 from FTCU. And the most reliable providers, time and time again, have been state and local credit unions. And you can kind of stitch this together, so to speak. So you can have 3 to 5 providers, each of them giving you $30,000, $50,000, and make up that amount that we were just talking about, $150,000, $200,000. This is another popular option that applicants have. And this is related to another funding strategy that I'll speak to briefly. So let's say you worked in India or your family has savings in India and you want to transfer it to the US for the purposes of EB5. There are two options available. One is if it's your funds, you can actually transfer it through your NRO account. You can transfer up to $1 million a year without a tax liability. So there's a lot of flexibility here. But let's say the funds are with a family member, right? And they are an Indian resident. So even in those cases, you can transfer up to $250,000 a year. You should take the help of a CA to file the necessary forms with RBI, but you'd be able to claim an exemption of this amount. So in terms of fund transfers outside of India, through the liberalized scheme, it's called the LRS, we have a lot of flexibility, more than what many applicants initially assume. So per Indian resident, we can transfer $250,000 a year. And if you're already set up as an NRI, you have an NRO account, you can transfer up to $1 million a year through your NRO account. And where does this come into the picture? Yes, you have funds, your family may have funds, but let's say you have assets and not readily available liquid funds. This is a strategy that we are seeing more and more applicants tap into as well, is basically borrowing against property, gold, other assets in India. And similar to the unsecured loan that we discussed, the main consideration here is what does the bank allow you to do? Initially, RBI had restrictions on transferring the funds out of India, any loaned funds within India. However, they've loosened those restrictions. So now it comes to the bank, so to speak. So your relationship with the bank manager and looking for the terms in the loan letter, like I mentioned. As long as they are silent about being able to move your funds abroad, your loan funds abroad, then you're perfectly fine. And the bank, again, that we have consistently seen be the most flexible, the most supportive that EB5 applicants have worked with has been IDFC Bank. We've also seen a few other banks come up, but this bank has been the top lender over the past year. And finally, gifts. So gifts are very common source of funds too. And why am I placing gifts at the very end of the slides? Is because whatever we shared earlier as a funding source, they can be used as gifts. So let's say you have a friend or a family member, they can take a loan against a property against stock use their HELOC and give it to you as a gift. So the main consideration is anyone gifting you funds for EB5 in USCIS's eyes becomes a mini EB5 applicant themselves. So now the onus is on them to provide 7 years of bank statements, tax records, and whatnot. And sometimes that becomes a tough ask because even if friends and family members are supportive, that level of transparency with the government, people might just take a little bit more time to get comfortable, or they might require a bit more convincing for it to happen. But in terms of what types of funds are accepted as gifts, whatever we discussed previously, all of those can be tapped into by a friend or a family member and then gifted to you. A related question to this is what is the tax impact when someone gives you the funds? Within the US, there's a lifetime gift tax exemption of $10 million. So someone can gift you the entire $800,000 and that's still covered under the exemption. And all that's needed is to execute a deed to that effect, right? And the law firms will share a draft of that deed with you, and you retain those for your tax records. So basically, the different source of funds we discussed over the past 20 minutes or so, they can be leveraged as gifts. There's a gift tax exemption for 10 million. So there's no tax liability on the sender or receiver of the gift. And in terms of documentation, the law firms have templates. So they have deeds that they can share with you to make sure it's properly documented. And one important point to cover too, and if you've been attending my webinars, this is something over the past few months I've been sharing information on and then updates on as well. So what happened over the past 2 years or so is quite a few regional centers, they set up loan programs. So these were sister companies, affiliate companies that provided unsecured loans, sometimes secured as well, for up to $400,000. So that way they expand access to EB5 to more applicants. And interestingly, what happened is about 70 petitions, so over, you could say 100 people, were successfully approved through the loan programs over the course of the past 2 years. But suddenly in October last year, USCIS changed its interpretation on these loans. So they started issuing RFEs, NOIDs, and denials for loan applicants. And the thought process that I want to share is we take a step back. No one in the EB5 space would claim to be an innovator. And why do I mention this? It's because the industry as a whole is extremely conservative and risk averse. And an innovator is kind of a label people don't want to be attached with. And the reason I share that is these programs were set up with the best practices in mind. So they consulted the best in class experts, even former visa officers, consular section chiefs. And what ends up happening is sometimes immigration is reading tea leaves. So the attorneys have a consensus and there are approvals coming. But then once in a while you get an RFE, then you get NOIDs, denials, and the consensus changes. The reason being there's no one at USCIS any of us can call, even the attorneys can call, to understand, hey, what's running in your mind? So you have a policy manual, but how are you interpreting the policy? And also, no one from the agency shows up at any of the immigration law conferences to talk about how they are adjudicating petitions. So that gap results in the process, what I mentioned, where the only way we know what's working is people submit petitions, we get responses, and we calibrate accordingly. But to summarize, as of right now, this is no longer an option, as in most regional centers that pioneered the loans, have issued out loans, have stopped issuing out new loans. And the ones who have already worked with applicants on the loan programs are figuring out other strategies, including like refiling as well. So just wanted to share that as like a latest update when it comes to regional center loans, in case you are considering this as a potential option. So I'll take a pause here. Appreciate all of you for patiently listening to the presentation and the slides. I'll also share a link to my Calendly. So happy to go into this in more detail pertaining to your specific background. We have a few questions in the chat. So in case you have further questions, please feel free to ask. MG asked, the property has on the parent name, the primary account would be me. Is it possible to transfer the money to my or my partner's account and can be used as SOF? That's a great question. And what you're sharing is a very common mistake that we see with the source of funds process. So, in terms of the documentation, the cleanest way is for the property to be transferred to you, and then you're initiating the entire transaction. But if that's not possible, then yes, your parents are doing the transaction, and then the funds, they are deeding it as a gift to you, and there's a proper documentation of that. And in cases like this, what the attorney would typically have you do is explain the workflow. So, how did your parents purchase this property? Or how did you help purchase this property? Perhaps it's just on your parents' name. How long has it been? And now, when you're considering selling the property or taking a loan against it, step by step. So, who's taking a loan? Which bank account is it going to? Then, how is it being transferred to your account? As long as that workflow is clearly mapped out and there's supporting documentation, what you're sharing hasn't been an issue for applicants. So, this is something that the attorney would definitely walk through with you in more detail. So, in case you had a follow up, I've asked you to unmute, so you can feel free to ask.
Thank you so much, Nikhil.
Awesome. Thank you. Moving on, Pranav asked, how much time does the SGIRA process take from start to finish? Honestly, 15 minutes online. I mean, that's how long it takes. You go to one of these providers, you set up an account, you match the account type to your 401k or your former employer's 401k account type. If it's a traditional 401k or an IRA. And once it's set up, you can move your funds and then it's in your SDIRA. Then you coordinate with the project to initiate the transaction. So it's a very seamless process and it can be completed online with little to no friction. And any documentation the attorney needs, those can be downloaded through the original 401k portal and the STIRA portal as well. Hope that answered your question. Moving on, Andy asked a follow-up question, which is, can vested stock loan be used from friends and family as a source of funds? Yes, it can. So like I mentioned, all of the sources we discuss, can be leveraged as a gift. But the key here is the documentation. So the friend, for example, who's taking the SB lock and giving it to you for EB5 purposes, they would be treated as a mini EB5 applicant. So they'd have to provide 7 years of bank statements, tax records, and pay stubs. Again, a good question to ask is that necessary? But that's just what USCIS expects, right? So they will go through, they need to be comfortable with that level of transparency. But that being said, in terms of the mechanism, it's very straightforward, which is they can take the loan against their stocks, they can deed it to you as a gift, and you can use it for your EB5 purposes. And the additional requirement on the source of funds, the attorney will typically share a checklist and work with your friend or family member on that. Hope that answered your question. Vijay asked, can we go for total 800,000 in loan to fund EB5? That's a great question. Actually, yes. Loans overall, or let me draw the distinction. There are two types of loans. There's secured loans and there's unsecured loans. So as a category, secured loans overall are very favorably looked by USCIS because there's typically a financial institution that's also doing diligence on you as a borrower and approving you for a loan. So the key question here is, for that $800,000, do you have enough collateral to show? And it can be different types of collateral, as we discussed, right? So it can be your primary home, it can be an investment property, it can be properties or gold in India, it can be RSUs you're received as compensation. So as long as you're borrowing the 800,000 against some kind of collateral, then USCIS looks very favorably on it. Where issues arise is with unsecured loans, where it's basically given on your ability to repay. And the higher the unsecured loan amount is, that might raise concerns with USCIS, where they're like, if they don't have confidence in your earnings potential or your ability to repay, they might come to the assumption that, hey, you're maybe providing the project as collateral in order to take up to 300,000, 400,000 as an unsecured loan. So to summarize, secured loans, very favorably looked on by USCIS. Unsecured loans, they receive a lot more scrutiny, but the amount of unsecured loans matters. If it's 150 to 200,000, perfectly fine. Any more than that, that's something very case specific. Have to go into detail with the attorney. Hope that answered your question. Pranav asked, is a margin loan from Robinhood considered with more scrutiny by USCIS than an SPLOC, assuming both are secured by the same equity value and have the appropriate documentation of source of funds? So taking a step back, what USCIS cares about is the documentation perspective, right? So if there is the same level of documentation for both, then we are fine from the USCIS perspective. The preference of which lender to use, that's like your decision to make based on what favorable terms that you're getting from each lender. So that's more about just optimizing for your benefit. Because on the immigration side, from a documentation standpoint, it's pretty standardized now. All of them are licensed, very large brokerages, and they would give you the required, you'd be able to go into the account and require the necessary forms yourself. So, hope that answered your questions. Mazur asked, so regional center loan is not an option anymore for 400,000. Unfortunately, not. And there are still regional centers that advertise and market the loans. But uh, in terms of if you speak to any attorney, they'd be like, there's a very high chance your petition would be denied if you take a regional center loan. So the key question is with risk. Is it worth taking the loan? Because if your green card petition is denied, in most of these projects, there's no way to even get your money out. So even your money is locked up for 3 to 5 years. And this is something even the RCs will clearly explain to you as a risk. So in terms of is the option still available? Yes, maybe one or two RCs are still offering those loans. In terms of is it going to increase the risk of a denial? Yes, it definitely will. Should you proceed with it or not, understanding the risks? That's a decision that you kind of need to make personally with your attorney, right? So hopefully that answers your question. Sahil said, I have a question on 401k rollover to IRA. Yes, please go ahead,
Hey,
Sahil.
hey, Nikin, thanks for all the info. I have a quick question. So you mentioned that from the old employer 401k, it's possible to transfer the funds as is. So hypothetically, someone has say 150k in their 401k and they're in between jobs and they want to roll over. They have the option to roll over. So what's the best way to do it? You should roll over into an IRA and then all that say 150,000 would go towards the 800k of 401 of the EB5 escrow amount, or how does that work? In like as an example.
That's a great question. There's a very specific way to do it, which is a self-directed IRA account. So it's called a SIDRA account. If you roll it over into your current or new employer's account, then those funds can no longer be used, right? So those funds have to be moved into a self-directed IRA, and then you change the trustee. So that's the technical term for what happens. So you change the trustee from the company stock, the S&P 500, to the EB5 project.
So basically, like, say someone is rolling over their 401k. They have to, for now, like in the interim, they can roll over to say like Fidelity IRA, right? And then when time comes, they can make the custodian to the escrow amount, or like, or should we just keep it as is in the old employer and then and not make an IRA? Like, should someone make a 401k into an IRA and then go for a self-directed IRA, or they should just keep it as an old employer 401k for now? And uh,
To keep it very simple, you should just keep
yeah,
it in the old employer's 401k, right?
okay.
Because
And then when
even
time
before,
comes,
yeah, even
yeah.
before initiating this, the attorneys have to clear your source of funds. So there is a
Hmm,
process to follow. So once you retain an attorney, they'll start going over the documents. They'll give you the green light, and then you can start moving the funds. So for the time being, the best place for the funds to be is in your former employer's account.
got it. Okay, instead of doing the IRA, because a lot of people do the IRA rollover when they like change employers or whatnot. Like they make they transition into their own IRA because you have like more selection of equities to choose from in your IRA. So a lot of people do that rollover, but you're saying avoid it. Don't do that. Just keep the 401k, right?
So this is the, I think there is a bit of a confusion here, right? So the main difference is in your current employer's account. Typically, you have two choices. So you have traditional 401k and you have an IRA, right?
Yeah.
But the challenge is your employer is contributing to both those accounts. And once they start contributing, then that account becomes restricted. You can't do much with those funds. So the pathway that we are talking about, it might be confusing because it's also called IRA, but it's a separate pathway. So it's called SIDRA, self-directed IRA, think of it as I'm taking my former employer's 401k funds, I'm
Mm-hmm.
moving it to a staging account for EB5 purposes. Then I'm going
Mm-hmm.
to invest in the EB5 project. And then once that project is completed, it comes back to this retirement account, right?
Got it.
So,
And traditional 401ks work, right? Like pre-tax money should be good.
yes.
Okay. Thanks. Thank you, Nikhil. Yeah.
So, appreciate you asking that question. MG had a follow up question. Trying to find you on the screen. Could you please raise your hands? Oh, yes.
So, following up on Sahil's question, so I understand that if we have a amount in our previous employer's 401k, so the SDIRA is that we are just moving that to a traditional account, right? Traditional IRA, and that traditional IRA is self as the SDIRA, right?
The main flexibility here is the nature of the self directed IRA is you can invest in different types of assets, right? So it's just not restricted to what the employer plan allows. You can choose to take those funds and make your own investments. And
I
here, for the
understand.
purposes of EB5, it's a real estate investment.
What my question is, like,
Mm.
I've already rolled over my previous employer's 401k to a traditional IRA. So, is there anything other than that I need to transfer to so that I can move that into the EB5 trustees account, or I can move directly from that traditional IRA account to the trustee account?
To clarify, is your current employer contributing to this
No,
specific
no, not
IRA account?
current. Previous employer's 401k, I moved it to a
Okay.
traditional
So
IRA.
you've already moved it.
Yeah, I already moved it. So from that traditional IRA, do I need to transfer to any SD IRA, or I need to transfer it to the trustee fund?
Some the clarification needed here. Who is this traditional IRA with?
Nothing. It's on my own account right now in the Fidelity.
Oh, it's within Fidelity, right? So
Yeah.
the question to just ask Fidelity is, hey, can I use these funds to make a real estate investment? So if they allow that, then we are well and good.
Mhm.
All we have to wait is for the attorney to complete the source of funds work, give you a green light. You get
Mhm.
the escrow account number from the project, and you can direct the funds over there. But for whatever reason, if Fidelity is like your account type doesn't allow you to do that, then you'd have to move to another provider. So in our experience, we haven't seen Fidelity be used for this purpose. There are smaller providers like Alto IRA, Equity Trust Bank, Metropolitan Trust Bank, like a few others that are top when it comes to the Sidra facility that we're talking about.
Okay. Uh, Follow-up question again. So me and my partner both have previous employers 401k. So is it only one person they can roll over to the trustee fund, or both can do it?
The primary applicant.
So both cannot able to do it. Only the one who is the primary
Yeah.
applicant. Okay,
So
got
that's a choice again to discuss internally and make with the attorney, right?
it. Okay, perfect. Thank you.
Yeah. Thank you for asking. Yes, please go ahead, Naveen.
So my question is about uh, being able to use like a 60-day rollover or an indirect rollover for a previous employer's 401k and using those funds to invest into the EB5 project and ultimately replacing these funds through an RC loan or other type of debt that we end up taking like within the 60 days from the date of funding or withdrawal, right? Is that any caveats to this? Is this a viable strategy?
UCS mostly cares about the source of funds at the time of filing. So
Okay.
the first part of your question, which is, hey, can me and my spouse use former employers' 401ks, use self-directed IRA, use it for EB5 purposes? Yes. The second part of the question, can we use different funds in order to pay off these debt obligations? Yes. So that you do have flexibility on, right? So the key question is USCIS might potentially come back with an RFE saying how you're contributing or how you're repaying the loans. But that RFE arises based on what we discussed earlier, right? Which is if you have a large amount of unsecured loans, that's where they would come up with that question. Is this a genuine loan? Are you actually making the required interest payments and contributions? So just to summarize in terms of the answer to the question, from a source of funds perspective for the initial petition, should be okay. In terms of the repayment strategy, it really depends on what mix of funds we are talking about. And this is something an attorney can evaluate on a case by case basis and tell you what to watch out for.
Got it. Thank you.
Thank you. Mazur asks, profits from crypto trading, are they fine? Actually, this is a great question. I would combine it with another related question. So let's say you do trading in general. What happens then? So attorneys, as long as the activities are happening in one account, then we can definitely simplify the documentation and the attorney's work is cut out. The key friction or flags that arise is, let's say you're doing withdrawals and deposits into an account. When that happens, the source of funds changes. So when you take money out of an account, then you put money back in. USCIS wants to know, okay, this $10,000 or this $30,000, where did it come? And that's the main questions attorneys have to applicants when they're doing any kind of active trading. So it's just not crypto, but even with stocks and options and such. And the most concerning is sometimes applicants, they take money from friends and family, right? Hey, 5,000 here, 10,000 there. They pool the funds together to do trading activities. And if there are repeated instances of that, or based on the volumes we're talking about, then the attorneys would generally recommend not to use that funds for EB5 purposes. So it really depends. It's on a case by case basis, Mazur. This is a great question. But just to summarize, trading definitely permissible if the trading happens within the account that we are considering, well and good. But if there is trading and there are transactions which cannot be easily explained, and what I mean by that are those withdrawals, deposits, getting money from friends, then the attorneys would recommend very likely to not use it as a source of fund. Hope that answers your question. DJ asked, is it allowed couples as an EB5 applicant combined SOF from their savings and 401k? Yes. So typically DJ couples apply together, but you do have to pick a primary applicant and a dependent. And for some of the strategies that we are talking about, such as the 401k rollover, the primary applicant is the one who has the benefit, who can actually initiate and implement that strategy. Outside of the 401k rollover, the other types of loans that we spoke about, earned income savings that we spoke about, that couples can use without any further consideration or restriction. So the main restriction is with a 401k rollover when people are applying as a family. So I hope that answered your question. IMG asked a follow-up. Appreciate you sharing more details, MG.
I've already asked the question on the Sahil, so the follow-up was done. I have another question on the HELOC actually. I've put it on the chat.
Yeah. So you do have to subtract any remaining mortgage from that appreciated equity value, right? So when it comes to HELOCs, I mean, what we help applicants with mainly is we collect like high level information from them and we do a search in our database and we come up with a list of lenders that they can go and talk to. But ultimately, this process is a process of like shopping around, so to speak, right? So it's calling, submitting applications, and not initiating like a hard search, but it's getting a rough estimate of how much you can draw. So happy
My
to.
question,
And,
my My question was, in the previous slide, you mentioned that we can only take a loan from the appraisal that we have on the property. But isn't it that how much equity we actually have on the property is where we can take a loan from? That is my confusion and question.
in our experience, I mean, yes, but I was more referring to the workflow. So what happens, let's say when you initiate a request for a HELOC, they generally schedule an appraiser to come. So that's been our experience working with applicants here in the Northeast, in the Bay Area as well. And the lender just needs it for documentation purposes. So whether that affects the loan calculation, that I can get back to you on, but I was just referring to in terms of the workflow.
We can do it offline. More.
Yep. Awesome. Thank you all so much
Thank you.
for taking the time. I know we are a few minutes over. We'll send a follow up email with a copy of the slides and this recording too. And in case you have any further questions, happy to continue the conversation one on one. So that way we can dive deeper into your specific case. And also, in case you need help with searching for lenders, once you have an intro call, I have some more information about where you're located, your background, and such. Happy to provide like a personalized list of lenders as well. Really appreciate each and every one of you for taking time out on a weekend to join and wishing you all a very great week ahead and the EB5 journey.